So Brendan, Tilray reported earnings yesterday, gross revenue of $51 million, and you said you'll be EBITDA positive by the fourth quarter of 2020, which is something obviously investors have been looking for. Is there any risk to this forecast if the rollout of new products in Canada takes longer than expected, or if new store openings come more slowly than expected? What are kind of the risk factors that you're looking at?
I think one of the things that we've done over the last year is diversify our revenue sources across multiple subsectors of cannabis. What does that mean, right? So in Canada, we've got a medical business. We've also got an adult use business. In the U.S., we have a very strong U.S. hemp food business. And then in Europe and internationally, we have an international medical business. And across those four different subsectors, that gives us some confidence that all of our risk isn't categorized in one single area. And so we're very confident about multiple subsectors. Certainly there's some risk in terms of adult use in Canada around retail store openings. We're projecting about 600 retail stores open in Canada in January. And if we end the year somewhere around 1,000, in Canada, we have some buffer sort of in our targets between 800 and 1,000 that give us a lot of confidence.
So it sounds like you're pretty solid on that guidance then.
We are.
And you had said previously that you had broken out profitability in Canada versus profitability in Europe. So do you expect to be profitable in Canada sooner than the fourth quarter of 2020, or is that the target you're sticking to for all parts of the business?
It's likely that our business in Canada will be certainly EBITDA positive before the rest of our business. And it's just because it's at a different stage of development. That business is much more mature. We've been operating it for 6 years. If you think about in this last quarter, our international revenue grew fivefold compared to a year ago. And that only happened because we generated our first revenue out of Portugal. The $3.3 million US export from Portugal to Germany. And that export only happened because we made investments back in 2016, 17, 18 in order to build that facility. And so in order to have the rapid revenue growth that we've had to make investments in these emerging markets. And so they're just at different levels in the maturity cycle.
So Canada could be sooner than these other markets.
That's right. That's right.
So obviously it's been a bearish stretch for cannabis stocks. Tilray's down about 80% from its highs. You said yesterday with your earnings release that you have enough cash on your balance sheet to get you through 2020. Is there any risk to that, though, again, if the rollout of the new products in Canada is more slow than expected? Could you find yourself cash constrained and having to turn to some sort of financing option?
We're comfortable with our cash position, getting us to profitability, getting us to being EBITDA positive. When I look at this sector, I can't think of another global emerging sector that is so predictable in that I've never seen an opportunity like this that is so clear. And as we look at country after country around the world legalizing medical cannabis, and I think we'll see 3 or 4 countries legalize for adult use in 2020, there's a very clear path towards growth. If you think about adult use, we only have 2 out of 196 countries. 1% of the countries in the world have legalized for adult use. And I know that number 5 years from now, 10 years from now is going to be in the 10s and 20s.
So it's a tough environment for capital raising right now. Many companies are finding it difficult to access really any kind of traditional financing. If you had to tap the markets, what sort of financing would you look at? Would you consider debt? Would you consider a REIT, which some companies have done? Have you considered your options there?
Certainly, we're always looking at options and have lots of different options presented to us. We have about $300 million in real estate and facility assets that we own completely, and so that's clearly one option. But at this point, we haven't moved very far down any of those paths.
Okay. I want to talk about these new products that are coming to the Canadian marketplace. Starting in December, they'll begin to hit store shelves, things like beverages, edibles, vapes. You're planning to introduce a CBD-infused beverage through your joint venture with AB InBev. Why start with CBD and not THC?
So about a year ago, we announced the joint venture with AB InBev. Last month, I think, we announced the name of that joint venture. So it's called Fluent. There's a CEO. There's a team. It's a team of employees that some of them came from ABI, some of them came from Tilray, and some of them were hired specifically for that company. And we're very excited about the products that Fluent is launching. Fluent looked at consumer segmentation information on Canadian consumers and saw a very strong desire for CBD beverages. We've done a lot of work in terms of stability and flavor and taste and packaging and brand. And so they're excited to launch those CBD beverages in December and January. They're out meeting with the various buyers throughout Canada. At some point, we don't know if it's Q1, Q2, it's very likely that they'll introduce a few brands and products around THC.
Let's talk about the U.S. CBD opportunity. You already have a few CBD products available in the American market. Could we see a Fluent CBD beverage for sale in the U.S. at some point in the near future?
At some point in the future, certainly. The question would be how near. I think a lot of companies, a lot of retailers are waiting for some sort of clarity from the FDA. And once that happens, I think you will see a lot of companies not only produce products and brands and distribute them, but a lot of retailers throughout America selling them.
Just to wrap up, you also said you'll be introducing vape pens to the Canadian market. Obviously, we're in the midst of a vaping-related health crisis in the U.S., and there are a lot of consumer concerns around those products. Do you think that it could affect your potential sales outlook for those products at all?
I think there's a lot of uncertainty right now, and we're a medical company first, and in 13 countries around the world, we distribute medical products through pharmacies, and so we're always focused on safety and quality. I think that a lot of the information that came from the CDC last Friday was focused on, number one, illicit vape carts, number two, carts that contained vitamin E as a carrier oil. And none of the products that we'll introduce in Canada have any carrier oils, so they're 100% cannabis derived. And so I think that gives us some confidence that, and the fact that Health Canada regulates our products and they test. We have mandatory testing on all of the products that we distribute. Gives us some confidence.